Welcome back, ladies and gentlemen, guys and girls. Another Come Learn With Me session. This is your CIO, Greg Silverman speaking. And seems like all the articles that did well last week had to do with how bad inflation is for consumers and consumer salaries. I'm not disputing that. I think it is. Pension fund returns, unfunded liabilities have increased as a result of the drawdown. I mean, listen, we're down 20% and we were up, magnitudes of that between 2018 2021, notwithstanding the 2020 COVID drop. Anyway, here's another one, right? That's percolating to the top. Just interesting. I want you all to look at this from a psychological point of view. What does it mean when we're looking at these articles saying how bad it's got, how bad the returns are? It has a psychological effect on investors. Okay, Ivy League endowments brace for losses with private equity values tumbling. Princeton, Harvard, among those with big private equity stakes. Stock reversal from 21 when endowments posted fat returns. So again, you can substitute endowments for consumers or for pensions. Princeton, Harvard, and Yale generated robust returns for the endowments in recent years, fueled in part by billions of dollars of investment in private equity and venture capital. That golden era appears to be over, at least for now. College endowments across the US are likely to report losses for the fiscal year ended June 30, as valuations for startups and other closely held companies deflate, following a sharp decline in public markets at the end of cheap leverage. The magnitude of the drawdown of venture companies in public markets is so much greater than it has been going back to the financial crisis. Interesting. I mean, magnitude drawdown in venture. And public market? Okay. Said Jay Ripley, co-head of investments at Global Endowment Management, which runs $12 billion for colleges and foundations. Rising rates and recession risks are threatening startup valuations. The consequences will ripple across private equity, where firms such as Blackstone made big bets on fast-growing companies in recent years. Markdowns have already bruised other money managers, contributing to record losses at the hedge funds of Tiger Global Management and D1 Capital Partners. Many are being hit by both write-downs on venture holdings as well as losses on publicly traded stocks. Earlier this year, Coatue Management, I know them, side-pocketed some assets rather than unload them at depressed prices. The California Public Employees Retirement System recently sold about $6 billion for privates at a 10% discount. Rich schools have bumped up their stakes in private investments. Okay, we know that. Wow. 46% of Notre Dame's private equity, allocation is in private equity. The richest US colleges have the most exposure. Those with endowments of more than $1 billion had about 30% of their holdings in private equity and venture capital as of fiscal 21, according to TIAA and the National Association of College and University Business Officers. When colleges report financial results for the year ended 30 June, you're going to see a large proportion of endowments over-allocated to private equity, said Karen Rode, head of private equity and infrastructure at Aon PLC, which helps endowments invest capital. It's a stock reversal from fiscal 21 when endowments generated fat returns and the richest schools faced pressure to increase spending on faculty, facilities, and financial aid. Well, that's not a problem anymore. But the pandemic dealt a sharp financial blow, crimping revenue from tuition, room and board as students sat out or studied remotely. Now surging inflation is eroding colleges' spending power. The stock market decline may further constrain parents' budgets. Princeton's portfolio. Princeton, with a $37.7 billion endowment led by Andrew Golden, has steadily boosted its allocation to private equity. Such investments account for 42% of the portfolio, 12% point above target as of June 21. Rationale for the increase? Spectacular performance, the manager said in Endowment's annual report. Indeed, private equity was Princeton's best performing asset for the period, returning 99%. Wow. Read more. Princeton Endowment gains 46.9%. At Harvard, the richest US college with fund valued at about $53.2 billion, the portion of the portfolio dedicated to private equity has more than doubled in 3 years through June 21 to 34%, and endowment chief NP Narvika. Yale's University private equity and venture holding accounts for 38% of the endowment, as of June 20, compared with 30% in mid-2016. The fund led by Chief Investment Officer Matt Mendelsohn declined to provide 21 data. Representatives for the schools declined to comment. While private colleges aren't required to disclose their holdings, public records show that state schools put money to work with some of the biggest hedge funds, venture capital, and private equity firms. The University of California's endowment has invested with Sequoia Capital and Blackstone. The University of Michigan is a client of Bridgewater Associates and Farallon Capital Management. The University of Texas co-invests with Fortress. Rising recession risks and lackluster returns could alter spending outlook for colleges after a period in which the strongest returns since the 1980s allowed them to add money for initiatives including financial aid and staff benefits. Endowment leaders, however, say budgets are based on multi-year averages, not one-year return. Bloomberg Intelligence says private equity's oft-discussed outperformance is limited to the best months of equity markets and doesn't come to the rescue in the worst down months. Gaurav Patanka, PR senior strategist. How are we doing there? Okay. Doing good. Many private equity managers have big incentives to hold up on marking down the value of their investments, allowing them to maintain healthy returns while hoping for the market turmoil to end. That's likely to set up a clash between investment firms and endowments. Private equity will slowly get written down if the market doesn't rebound quickly, said Philip Zika, CIO of Michigan State University's $3.9 billion endowment. As of the middle of last year, 40% of the school's portfolio was allocated to private investments. This year, Blackstone executives told investors in a crossover fund, which bets on both public and private firms, that they would wait until private company valuations reset before they get comfortable investing more of the fund there. Some endowments are pushing investors to devalue their assets as soon as possible to avoid the prospect of protracted write-downs. Scott Wilson, CIO of Washington University in St. Louis, is among them. The school's fund returned 65% last year. We're encouraging our partners to be aggressive in write-downs, says Wilson, who manages $15.3 billion. I'd rather have the marks reflect reality. Good article. Endowment investors known to be some of the most savvy in the world. Oh, I hope you liked that. Learned a lot from this article, at least I did. Hope you enjoyed that. Please subscribe and like, and take a look at the links below and come join us on some of our niche investment LinkedIn investment groups. Greg Silverman signing out.